Hey guys, here on Cat Swiss I spotted a very cute triangle formation. In this video I'll teach you how to treat this pattern, how to set stop loss, how to select the targets, where should be your entry, and I will teach you how to manage your trade. If you want to learn how to treat price action patterns, it will be a very useful video for you. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The first and a very important condition that we should take into consideration when we treat the price action patterns is where the price action pattern is formed. It is very important that the pattern that you spotted is formed on a key level. So your first task when you treat the price action patterns is to execute structure analysis to identify key levels on higher time frames, and then on that levels you should look for the price action pattern. On a Cat Swiss pair, we are on a daily time frame, and on a daily time frame your task is to execute structure analysis. You can see that here the pair is trading in a strong bullish trend. For a quite long period of time the market was growing sharply, and once that structure high was reached we started a very nice correctional movement from that structure. And at the moment, looking left at structure, you can see that right here we have a very strong zone of demand. Yes, you can see that in the past it was a very strong resistance. Multiple times the market dropped from this structure. Then after the breakout, the structure turned into support. And you can see that once that structure was reached after the sharp bearish movement, a very nice and cute doji candle was formed right here. So definitely it is a key level, yes. And once the price is approaching a key level, only then you should look for price action patterns for trading on lower time frames. So let's check where do we see the triangle. Hey traders, learn technical analysis with my ebook. If you want to learn price action trading, structure trading, top-down analysis, candlestick patterns, risk management, and trade management, you will definitely enjoy that. You can look inside the book on my website. It is vasilytrader.com/ebook. Check that and let's continue. And you may ask me, Vasily, why do we need to analyze lower time frames? The point is that analyzing lower time frames, we can see the reaction of the price to the structure that we spotted on a higher time frame. So how do we analyze the reaction? We analyze the price action because price action is very telling. So here on Cat Swiss, our task is to analyze the price action on lower time frames and check what is happening right here. So let's take away everything and let's analyze the price action. Here we got a very strong bearish rally. The market dropped sharply, and here we set a new level low. From that level the market retraced, and here we got a low high. Then the market dropped, but it didn't manage to reach the current level, and instead right here we see the higher level. Then we bounced, and here we set equal high. From that equal high we dropped again, and the price set higher level, and then we bounced again. So traders, here we see a perfect example of the ascending triangle formation. Right here we have the horizontal neckline, and we see multiple equal highs. Yes, right here. And at the same time you can see that we have the higher lows, and based on this higher lows we may draw this rising trend line. So right here we spotted the ascending triangle formation. Let me underline the boundaries of that pattern for you. Here is our pattern, right? And what do we know about this pattern? It is a classic reversal pattern. It is a very bullish pattern. And the trigger that we are looking for to buy the market, to open the long position, is the breakout of its neckline to the upside. And take a look what happened today. With this bullish candle right here, the market broke the neckline. Yes, and here we see a local new high. And it is a very important bullish clue. And most of the time, it confirms a highly probable coming bullish rally. So for us, it is the signal to buy. So let's discuss how we will buy Cat Swiss. So how will we trade this triangle formation? And let me give you a spoiler, traders. We already bought this triangle with my students. This morning we already opened a long position. And let me explain to you where is our stop loss, where is our entry, and where is our target. When you spot the ascending triangle formation, your first task, as we discussed, is to spot the breakout of a neckline. Once it is broken, I suggest opening a long position on a retest. By the way, if you want to learn why you should trade in a retest, why pro traders trade in a retest, watch this video. There I explained main benefits of retest trading. So here we already have the confirmed breakout, but what exactly the market should retest? Which level exactly? As you can see, our neckline right here is quite wide area. So where our entry should be? I have a very simple rule. Within the neckline, within the area of our neckline, I just look for the highest candle close. Yes, right here. Right here is the highest candle close. And that is my entry. Yes, that is my entry level. And from here, we buy, right? Then, how about the stop loss? There are a lot of different strategies for stop loss placement treating the triangles, but I always recommend to set stop loss below the lows of a triangle. It is the safest stop loss. Of course, when you mature in trading, you can play with stop loss, you can set it higher, but while you are learning, your safest stop loss will be below the lows. Yes, stick to that rule and you will catch a lot of winners with such a stop loss. How about the targets? Our initial target must be the closest strong structure resistance. So let's look left at structure and check where do we have a strong resistance. Looking left at structure, you can see that right here we have a very strong key level. Yes, we have a very strong structural resistance right here that the market, from where the market bounced nicely in the past, from where buyers were buying. And then after the breakout, you can see that it turned into a very strong resistance. And from that structure, we saw a very strong bearish movement. So here will be our initial target for the trade. And of course, you can trade this trading setup with multiple targets, and you can set your second target based on the next strong structure. The next strong structure is right here. So trading with the extended targets here will be your second target for the trade. But that is not all. Of course, you should learn how to manage your trade. And here let me share with you a very important tip. When you spot the triangle, measure the range of the pattern. Yes, from the low of the pattern to your entry. Yes, that is the pattern's range. And then once you measure the pattern range, project that range from your entry. Yes, you can see how I do that. And here, that is the level, the so-called break-even level. Once that level is reached, move your stop loss to entry and make your position risk-free. That is how we protect our trading position, trading price action patterns. Remember about this tip. So when you trade a triangle formation, remember that the first and very important condition is that the triangle that you spotted is formed on a key level that you spotted on higher time frames, like on a daily time frame. Only when the triangle is formed on a key level, then you can trade such a triangle. And your trigger, the trigger that you're looking for, is the breakout of its neckline. Only then you open your trading position on a retest. Let me know, traders, if you want to see more price action pattern videos. Let me know what pattern do you want to learn in the next video. Also, for more education, for more tips, don't forget to check my ebook. There I will teach you all the price action patterns that I know and how to trade them. Also, traders, let me know if you have any questions. If you have any questions, don't forget to ask me in the comment section. Finally, like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching, traders.